Hello everyone, and thank you for taking the time to watch this video. It's Tuesday afternoon, February 11th, 2025. In a few minutes, we will go over the most recent tariff updates and their impact on FX exchange rates. We will go over this week's economic data, the US Consumer Price Index, Producer Price Index, and the US retail sales. We will also review the CME FedWatch tool and see how the data may have impacted the interest rate for 2025. For more in-depth analysis, please consider registering for our live webinars. The schedule and the registration links are in the video description. Tomorrow morning at 8 a.m. Eastern Standard Time, we have the US CPI live webinar where we analyze the news in real time. Before we proceed, we must understand the risks involved in trading. Please take a moment to review and read carefully the disclaimers on the screen. Please remember that trading involves risk. Past performance is not indicative of future results, and losses can exceed deposits. The market opened this week. We saw the US dollar appreciating against major currencies. This follows the news of President Trump announcing tariffs on steel and aluminium. According to the Bloomberg Analyst Survey, we see that the core CPI month over month is expected to rise by 0.3 compared to 0.2 in the previous month. CPI year over year 2.9% unchanged. Core PPI month over month, that's for the following day, 0.3% compared to 0.0 last month, and then for the year over year 3.2% compared to 3.3% for the prior month. The chart we are looking at on the screen shows us how the US CPI over the past 5 years, how it performed, or the numbers over the past 5 years, and we can see that during 2024, inflation, the CPI has stabilized and all items stabilized near the 2.9% for the year-over-year figures, although it remained still above the Fed's target of 2%. And when we look back over the past few months, we can see that the US CPI stabilized around this level. On top of this, we had the tariffs concerns by traders. Tariffs are expected to make inflation go higher, and therefore some traders already anticipated less rate cuts for 2025 than it was previously projected. At the moment, for the December 19th, 2025 meeting, FOMC meeting, only 5.5% of market participants expect a rate cut. In other words, almost 94.5% expect rates to remain unchanged. Looking at the CME FedWatch tool, that's again the same meeting, March 19th, 2025. Almost entire market is anticipating rates to remain unchanged. And as we look further into the end of, or closer to the end of 2025, we can see that the majority of market participants still look at somewhere around just under, somewhere between 1.5 to 2 cuts, or 1 to 2 interest rate cuts by 25 basis points each before the end of the year. Now we take a look at Euro-Dollar daily chart and the technical analysis. We begin with the overall context of the chart. A zoomed out view of the chart. We see a downtrend which began in early 2022, a descending channel, and then price action began to move sideways for an extended period of time. And as we zoom in closer to what's happening for the most recent price action, we see the Euro-Dollar moving in a descending channel. And then we zoom in much further to see what's happening at the moment. We see that price action broke above the channel at a certain time here in late January, and then we had a pullback to the breakout level, to the extension of the breakout level. Then we had the first announcement of tariff at market open that took the price for the dollar up against everything. In other words, we saw Euro USD declining at market open all the way down to this level here, and then as the day progressed, price action went back up again on top of the broken level, or the extension of the broken level, and currently the pullback or throwback is finding support above the line. Price action has a confluence of resistance. That's where it's meeting at the moment. We have a pivot point, a monthly pivot point at 1.0357, 3 moving averages intersecting above the price action. This will represent a critical confluence of resistance for euro dollar. We had a gap down at market open. That's the one we discussed earlier regarding the tariffs on aluminium and steel imposed by President Trump. This is the USD CAD or USD against the Canadian dollar daily chart. And what we are looking at the chart at the moment, price was going or moving in an ascending channel, and then following the tariffs announcement on February 3rd, specifically the tariffs on Canada and Mexico, 25%. This took the price for USD CAD gapped up. USD went up against the Canadian dollar, found resistance close to, I would call this a short fall, found resistance close to the upper border of the ascending channel, and another resistance level here are to the standard calculation. And then we had a bearish engulfing candle that took the price all the way down on the daily time frame back to the lower border of the ascending channel, and then a break on the following day. And if we look at the break, it took the price below 2 critical pivot point, the weekly and the monthly pivot point within the range that we see on the chart. And now price action broke below 2 moving averages, the MA20 and the EMA9 and the SMA20, an intermediate and a fast moving averages. And we see that the price action has been trading around this support level 1.4326 and currently remains there over the past few days. This is a historical support level. We can see that price action found support here previously in the previous weeks, and therefore a break below can be substantial, and a break above the moving averages to the other side can be substantial as well. RSI 5, fast RSI, is at oversold territory and is in line with price action. Moving on to USD JPY, the US dollar versus the Japanese yen, and we're looking at the daily chart. We have been following this dashed black line for a while. We saw a break and then price pulled back, found resistance at the line, traded in a range highlighted here in yellow, and then we broke below the 3 moving averages that we are following, and then price action has been trading below the averages for the past several days, almost a month and more. Price action also broke below a critical pivot point, a monthly pivot point, as well as broke below the weekly pivot point as well. At the moment, price action is attempting a correction that's typical following a decline. A resistance level, a confluence of resistance lies ahead the price action, as we can see on the screen at the top here. An intersection of 2 moving averages, a support level, and the weekly pivot point. A break above may change the picture for the downtrend. However, if this resistance was to hold strong and we see a failure, then we may see the downtrend resumes. Once again, thank you for taking the time to watch this video. Reminding you to register for our live webinar, or you can watch it on YouTube live stream.